Tonight, finding profitable trades in Manic markets. I'm Don Kaufman. This is the TheoTrade presentation. A risk disclosure, we're not financial advisors nor a broker-dealer. The reason I put this up here is because I spent 15 years in the brokerage side of the business. I also love to put out, no soliciting, no photography, no recording. Of course, we're recording it for you. Do not feed the monkeys. I feel like we're at the zoo. Copyright disclaimer, this is ours. This is not yours. It's ours. Actually, I also like to point out right here, this is how you contact us after this evening. If you ever need to get a hold of me, we actually use a central inbox. It's support@theotrade.com. We encourage people, email us. It's all right. We actually answer emails. We read emails. I read, a vast number of emails that come in. And again, if you ever need to get a hold of me, just put attention Don and support at theotrade.com. So again, we support our traders through email. And of course, throughout, the course of any given trading day. It's also our phone number and our address here in Scottsdale, Arizona. By the way, that's where I'm broadcasting from this evening, Scottsdale, Arizona. As I was mentioning a little bit earlier, I did my time in Chicago. This is a little bit about me. I'm a co-founder here and lead instructor at TheoTrade. Been in the industry now just about 21 years. I started trading in the late 90s in Chicago. I come from kind of a family of traders. They started in the 1970s. Again, as I said, I started in the late 90s. A short time after trading in Chicago, I was invited into what was at the time a startup brokerage firm. Nobody ever heard of it. They called it Thinkorswim. Kind of felt like a joke name. All of a sudden, Thinkorswim came on the scene. Literally exploded almost overnight. I was with the company when we took it public. We were then, of course, acquired by TD Ameritrade. What I did for Thinkorswim and TD Ameritrade, I ran the education division. In fact, I built the education division of Thinkorswim going all the way back into the 2003 timeframe. Then ran education for the 7 million clients at TD Ameritrade. So it was actually a phenomenal experience, obviously being in the brokerage side of it, but I've also traded on the professional side for a large portion of that career. I've done a couple of different CNBC tours, this being the most memorable. They pitted me against none other than the shark himself, so Mr. Wonderful, and he was the long, I was the short. Actually, we'll talk a little bit about that this evening. Next, a little bit about TheoTrade. We specialize in education for stocks, options, and futures. We're founded by professional traders, all of which have a minimum of 15 years of experience, a couple of us with several decades. That's of critical importance to us. There's a lot of different, venues out there with different traders and so forth. All of our crew here have a minimum of 15 years of experience in the markets. We're here to help you mitigate the risks in the market or learning a skill set that can last a lifetime. The other aspect that I weigh very heavily into this, TheoTrade, it's not just me. It's not just Don Kaufman. We have Jeff Bierman on board. For those of you that do not know Jeff Bierman, he works side by side with me at Thinkorswim. In fact, if you guys are on Thinkorswim or know a little bit about TD Ameritrade, Jeff helped build the charting application for Thinkorswim, which is, hailed as one of the greatest charting applications ever. We now have Jeff Bierman on board. He, again, worked with me side by side for about 8 years, specifically in my group. He was also the former chief market technician for TD Ameritrade. We have Matt Williamson, market neutral, premium selling options strategist. Corey Rosenblum, he's our senior strategist, kind of our resident swing trader. We also have Brandon Chapman, CMT. Brandon also worked in the education side of TD Ameritrade for a number of years with me. He's actually phenomenal. Macroeconomics, what we call fusion, technicals, and fundamentals. Then we have Steve Miller. I've known Steve Miller since I am a kid. He started trading in the 1970s and was one of the first traders to the Chicago Board Options Exchange. In fact, before it was, they only traded calls originally. Also trades futures. Last but definitely not least, we have Tony Rago, NASDAQ future and intraday strategist. I just wanted to introduce the team. We now are 7 people full-time going strong. What you're going to learn this evening, a lot. There's a lot of bullet points over here. We're going to find what strategies become the bread and butter trades of TheoTrade in volatile markets. We're actually going to talk a little bit about investors and traders alike. We're going to see where some of the biggest opportunities exist and really some of the strategy to embrace that. We're why markets are very high probability they're going to remain volatile for years to come, and how to capitalize on the opportunity. In fact, that's one of the first things I'm going to show you here this evening. We're actually going to show you how to build trades with limited risk, maximize returns, how you can short markets, okay, in individual stocks inside of your retirement accounts. It's something that's of critical importance right now. If you're long the markets, you've probably taken a little bit of a beating. And we're actually going to show you how to mix that up a little bit. And again, you can short, individual stocks in your retirement accounts with these strategies. We'll talk about weekly returns while offsetting your portfolio's risk. And again, I'm going to show you a number real trade examples, stuff that I have on right now. Okay. Are we volatile? I think this is the best kind of starting place for this. By the way, anybody have an answer to that one? Are we volatile? Okay. So let's not put the cart before that term, the volatility horse. Okay. First, we really have to define what we believe to be a more volatile market. I'm actually going to show you something from a completely different perspective than you may be used to. And again, anybody can go out there and they go like, this is volatile. Look at the VIX. This is volatile. Look at the volatility. Okay. I'm going to show you a completely different perspective. How can we possibly give you a completely different perspective? Well, what a large divergence. Volatile markets can be defined in many ways. However, repeatedly, only in hindsight do traders tend to recognize volatility. I mean, you recognize like, oh yeah, it's Mr. Toad's wild ride out there on a day-to-day basis, but I tend to look at divergences in the broader markets, and indices to decipher as to when I believe the volatility will commence and or abate. Imagine that. I'm a guy that doesn't look much at charts. For those of you that have never really listened to myself, I'm not anti-charts. I don't rely on things like MACDs and Fibonacci's and Bollinger Bands. I'm not into magical, mythical beasts that are going to try to predict what the market's going to do, right? I look at data, okay? I am data-driven. I am quantitative driven. I know a lot of people have probably heard that term quant, okay? I'm absolutely quantitative, driven. But in this particular circumstance, we're going to look at charts to interpret something that you may or may not be aware of, okay? It's on. Throughout time, indices tend to maintain what we term correlations. They track, with one another, but can and do diverge for vast periods of time. One index product may outperform another index product for many years, maybe even a decade. Divergences in the indices end with periods of volatility. Index products converge upon one another in the throes of extreme volatility. Now, this is kind of a cool place to start. So you guys tell me, by the way, we're going to make this an interactive session. Even if you're listening to this on a recording, somebody's watching it on YouTube right now, okay? Talk to the screen, okay? Think about the index products. What has been the marketplace that has performed the best, let's say in the last 10 years? You guys tell me, from an index standpoint, what marketplace has performed the best over the last 10 years, okay? Come on, people. This is important, all right? Because I'm going to show you in the next slide. So it is undoubtedly the NASDAQ. It's undoubtedly the NASDAQ. Ready? Okay. Be very afraid. What you're looking at right now, and I'm going to start easy on you over here. What you're looking at here is a snippet in time. I actually started this, ironically, just around the time that a little after I started trading. I started trading in 1998, but I started trading early in the summer of 98, all the way until basically today. That's the date. Okay. This is the SPX is the primary symbol, but you can see the NDX, which is the NASDAQ, is outperforming the Russell, which is outperforming the S&Ps. Okay. And again, this is literally, listen, it's from 1998 to right now. So let's just call it what it is. It's 20 years. It's 20 years, the SPX. Okay. And it's a comparison chart. What am I trying to show you in this comparison chart? Well, let me cut to the chase. Okay. Right here, again, kind of labeled. You can see on the top, that's the NDX, the NASDAQ, the rut. Okay. The rut is this little guy right here. Okay, this is the NDX and this is the SPX. You see this? This is actually the internet boom. You see this? This is what we call convergence. You see this? This is what we call divergence. Okay, they're diverging from one another. You see this? They all converge upon. Okay, so what we're basically getting is ebb and flows. So what you do over time is you diverge. We have index products that are massively outperforming, then they converge upon one another. Okay, why do I say be very afraid in here? Because look how fast that convergence is playing out. It is absolutely spectacular right now. Now, zoom forward just a bit. Coming out of the financial crisis, the NASDAQ has been the clear percentage leader. Now, what we've done here, okay, this is what we've done coming out of the financial crisis. So now I actually took it into a 10-year weekly. Why? I just want to show you the cyclicality of a marketplace over a big time frame. Because when we're talking about volatility, you need to talk about mass time frames. Okay, and when we're talking about convergence and divergence, we want to look at this in the cyclicality of it, right? Okay, because you know what? People talk about cyclicality. We're going into a secular bear, this bear, that bear. Forget about that. We're converging. Right now we're converging because coming out of the financial crisis, the NASDAQ has been the clear percentage leader. Now the NASDAQ has reached bear market status and is converging upon, well, the other markets to the downside. If you don't believe it, the data is right here. Look, it's going down. These are also going down, but this is going down more than this, okay? Although the Russell is taking a pretty bad beating. In fact, put your seat back in upright and locked position because what you're going to see, pretty interesting. Now I take it into the ultimate short term. This is just the last 6 months. Okay, the SPX ironically is outperforming the NDX and outperforming the Russell, which is, hang on, it's the exact opposite of what you see here. Okay, before, after, before, after. Okay, all I'm showing you is the marketplace is absolutely converging upon itself. And again, if you look back at the cyclicality of this, okay, now this is not to say that if we can't have these wild, upswings, pull up, okay? But the NDX has converged a substantial amount already upon the SPX, very similarly to what was done here, okay? You saw a little bit of convergence back in the beginning of 2016, okay? Exploding higher. Nevertheless, this is big. It's really big. And again, the convergence has absolutely begun. What we expect, duration volatility. An area we should identify in viewing the previous comparison charts is the convergence of one index product, okay, upon another. It can absolutely take years. Now, the fun part of this is look for major convergence upon indices, okay, to help gauge the normalization of broader markets. Now, a lot can happen in the time of this convergence, but the one thing that's of incredible importance over here is that you can't anymore have the NASDAQ can go down, maybe the S&Ps are going to go up. It doesn't work that way anymore because Google and Apple and Amazon, okay, are both in the NASDAQ and in the S&P. The other thing that we have, okay, going against us a little bit right now is compounding our risk. It's a contracting of the balance sheet. So this is a slide I've used a lot recently. And you know what? I don't even want to weigh that heavily tonight into the Fed. I'm not going to weigh a huge amount into the Fed, but this is the Federal Reserve balance sheet. And the reason I bring it up here is everybody wants to talk about interest rates. They're going to raise interest rates. They're going to raise interest rates. Okay. I am telling you firsthand here, forget about interest rates. It's not actually of importance. What's more important is right here. It's the contraction of the balance sheet. And this is most definitively, it's on autopilot. They told you it was on autopilot. This will continue. Okay. The statements, if you listened, okay, and I'm telling you, listen to the Fed. They're going to tell you precisely what they're going to do. All right. So it doesn't matter if they raise interest rates at all at this point. Okay. The Federal Reserve balance sheet is on autopilot to be contracted. As long as they keep contracting this, you have to think of this as this gigantic hose sucking liquidity from the marketplace. Pretty interesting stuff. Now, moving forward. Da bears. I wanted to throw a few statistics out to you. Okay? The bears! By the way, I couldn't think of anything better to put the Yogi Bear down at the bottom. You got to appreciate that. Between 1900 and 2015, there were 32 bear markets, averaging one every 3.5 years. Now, granted, the last bear market coincided with the global financial crisis occurring between 2007 and March of 2009. Listen, I am sorry to geek out on you right now. Okay. And the reason I'm geeking out on you for a second here is I like some of the statistics behind this, and you'll find some of them interesting. By the way, this is the first time tonight right here that I've actually mentioned the Dow. All right. It's because the Dow, the data is really easy. I don't even mention the Dow. It is not a great measure of overall markets in my comparison. Okay. The Dow, being that it's 30 stocks, the biggest problem with the Dow, and I'm going to give it to you really straight here. The Dow, they continually change the stocks in and out, and only having 30 stocks is such a heavily manipulated index product that I just don't feel statistically significant about it. Okay, but during the last major bear market, which is 10 years ago, the Dow declined 54% during the period. Bear markets since the 1930s. There's a very bold statement here. Now, bear markets since the 1930s. Okay, I switched up the statistics intentionally on you here to omit. I omitted the Great Depression. Why? Because I didn't think it was fair. Okay, the Great Depression. I mean, you had, basically coming out of World War II was the first time the markets really recovered. So to omit that, I thought was more significant in terms of the statistics. They have an average duration of 18 months, okay, and an average loss of 40%. Okay, why did I throw that out there? NASDAQ officially entered into a bear market December 20th, 2018. The Russell officially entered into a bear market December 17th, 2018. Okay, the S&Ps, they missed it. They missed it by like 0.2%. Okay, but it doesn't matter. If we know that these are officially in bear market territory, okay, the average bear market lasts 18 months. Doesn't mean that this is necessarily going to last 18 months. Okay, but you have to recognize what you're involved in moving forward. And it's the starting place for what we have to lay the groundwork tonight. I mean, here's the bottom line. You got to have skills moving forward. You can't be like, and I like the picture of the monkey over here, because you can't be a monkey throwing darts anymore. You just can't do it. Last 10 years coming out of the financial crisis, you literally, I mean, people look at it and they're like, you could have been a monkey throwing darts. Literally, you could have been a monkey throwing darts to produce returns in the last 10 years. Advisors, mutual funds, indexing, which is ETFs, or a mix of bonds, it's going to likely underperform the traders in the years to come. By the way, last year was one amazing year because you basically had ETFs down, bonds down, okay? Even some of the commodities like oil down. So it was actually one of the first times in history that we had asset classes across the board that were net down. And I think you should put that in perspective. I don't care that we just rallied back a couple of points over here. Okay, what you need to focus on, the writing is on the wall. The Fed is going to continue to contract the balance sheet. It's set to autopilot. They told you that. Central banks around the world, they've already started to follow suit, except for, of course, for China. China just flipped over and went the other direction. China right now is in a little bit of panic mode. Okay, trading, investing, moving forward in U.S. markets, it's going to be a mix of both long and short positions. Getting purely long, okay, could be a serious mistake. You're going to have a mix of a portfolio. Many are familiar with just, buying markets, long stock, buy a stock, and bullish bias strategies. Allow us to turn the table and bring into focus a much needed skill, because the writing literally is on the wall. Don't flush money down a toilet. You don't have to be like incredibly brilliant over here. You just have to have a couple of skills, okay, that can work in a degree of volatility. So today we're just going to talk about one strategy, okay? And there's a lot to this strategy, but we're going to talk about one strategy you can use to profit from stocks heading down, okay, or range bound without taking on drastic risks. It's a very important concept, okay? First, let's get short the markets. Now, again, this is not necessarily the strategy, right? Anybody can learn how to short a market. You're like, check, please. Listen, when we talk about like getting short the marketplace, like that's not the strategy. But we have to discuss some of the logistics, some of the background before we get into the meat of this. So let's get short the markets. Allow us to briefly review the structure, risks, and the logic of getting short the market. Shorting is in effect selling shares that we do not own. Now, I know that a lot of people here have some degree of experience, okay? But is anybody here brand new? They've never shorted a stock. It's a fair question, okay? Listen, we have, almost 1,000 people on live this evening. A couple thousand more probably watch this on YouTube or something. And there's, this vast number of people that have never shorted a marketplace. But it's okay, okay? If the first thing people say, how can you sell something that you never owned? Well, you go out there and you borrow the shares from your broker. They actually, what they do, if you have like a TD Ameritrade account, somebody's long Apple at TD Ameritrade, they actually let you borrow those shares from that other person. And you're like, but I'm long Apple, and I didn't say it was okay to short my shares. Yes, you did. Okay. If you actually filled out the account agreement, it says it right in the account agreement. They can borrow my shares to short them. Okay. So the short shares, they're borrowed from the broker and sold with the intent of later buying them back at a lower price. Right? This is done like every single day. Like every single day in life, you're shorting something. Okay. How? I don't know. Go like order drapes. Okay. You ever order drapes for your house or carpeting for your house? Even better. You order carpet for the house. They come, they measure for the carpet. You probably pay them up front, and then they go, okay, we're going to bring you your carpet. What are they doing? They're selling you carpet short. Okay. They're basically, with the intent of delivering later. Okay. They sell you that carpet for, I don't know, $10,000. Then they go out and they buy some junk from down the street for $5,000. They slap it in your house, make a $5,000 profit. They're shorting carpet. This is a short stock example. So let's go out. And again, this is just an example. Okay. We short a stock at $135 per share. Okay. Let's say the stock, by the way, I don't like to call stock. I call it, all right, I call it stock because I've been doing this far too long. It's stock. Everything is stock. The stock value declines and we buy it back. So let's say the stock goes from 135 down to 95 now. Okay. What do we do over here? We sold it. What do we do over here? We buy it. Okay. What do we make? $40 a share. I mean, that's it. That's selling stock short. You're like, wait. So I can sell something I never owned? Yeah. Right. But there's some issues with that, right? What happens if, the stock doesn't necessarily go down? What happens if you go out there and the stock goes from 135 and you sold it and goes to 1,000? Oh, I have an answer for that. You are dead. Just dead. And that can happen to you. You get short, your stocks can run up massively. You could have unlimited risk to the upside. I love saying that. Unlimited risk. Don't worry. At some point, you'll run out of money. So the risk is actually limited. It's limited to whatever you have left. But let's get down and dirty. Let's go into a couple of real examples. First thing you got to talk about, finding a short candidate. So I wanted to throw a softball example. I wanted to throw a softball example for my very first example and just give you for instance, okay? Early this year, the Fed said that they were going to raise interest rates. And I'm actually using this example from earlier in the year, okay? Forgive me, because then I'm going to actually go into some very detailed examples that are prevalent right here and right now. So again, bear with me. Knowing interest rates are rising, I don't know, what might be a good short candidate? You guys tell me. Now remember, the Fed told us over a year ago that they had the intent of raising rates. This is even before, JP. By the way, JP is Jerome Powell. I feel like we're best friends. Okay. This is back in the Yellenator days. So what might be, okay, a decent short? Anybody in a rising interest rate environment? Anybody? Okay. It's interesting. A lot of people are saying banks. Interesting and ironically, the banks are supposed to provide, they make more in a higher interest rate environment. That hasn't happened. But this is fun because we're actually doing this in hindsight. Okay. The easiest, I think the layup one for me was actually the XHB. It was the home builders. The home builders encompasses not just home builders. So it has like Toll Brothers and it has Pulte in there, but it actually also has like major appliance makers from like dishwashers and stuff like that. Lowe's is in there. Okay. Home Depot is actually in here. By the way, I'm for just disclosure purposes, I carry positions in Lowe's right now, and I'll show you that here momentarily. I'm going to show you all my live positions. I don't mind. Here, okay. I listened to the Fed. That's all I did in this position. I just listened to the Fed. This was initiation of a short position on January 10th of 2018. I got short the XHB. What did it do? Not a whole lot, and then it went down. But actually, the XHB really started tanking well before the vast amount of the marketplace. By the way, the XHB also carried, this was almost a record in here of the number of down days of an ETF in a row. Okay, almost a record. There have been records that have beaten this. So what's wrong with this? Nothing. But before we go any further, short positions have some issues. We've got issues, people. Short positions technically have unlimited risk to the upside. Think about it. You short a stock, it could go up and run up indefinitely. We just mentioned that a moment ago. If you don't believe that, I don't know, look at Amazon. It did go up indefinitely. Okay, ask Bezos. Short positions tie up heavy amounts of capital and margin. Short positions cannot be placed in retirement accounts. Can't do it. Not in the US, not in Canada. Okay? And if you're short a stock that pays dividends, you have to end up paying the dividend. So what I need to do, okay, is to figure out how to circumnavigate these issues. Now we're starting to get into strategy, right? How can we build a short position? Number one, control our risks. Number two, not pay dividends. Number three, place the trade in a retirement account. Because if I can't hit upon those three aspects, it ain't even worth talking about. What we're going to do, we're going to get short without shorting the stock. All right? All we're going to do, right, is what we call a synthetic. In our aforementioned example, we shorted shares of XHB. Okay? In substitute of the short shares, we can elect to buy a put option contract. Right? The put option will limit our risk to the premium paid and provide us with outstanding downside potential. Now, this is a real trade. So I don't put any examples in here that are not valid real trades. This is the exact date and time of execution, as we mentioned. Okay. What did I buy? I bought a 48 put. Okay. The put that we're buying is what we term deep in the money. And I'll talk about that here momentarily. Buying the 48 put defines our risk to less than $3 per share. Yet it still provides stellar downside capabilities. The key here is knowing the right put to buy. It's one of the absolute keys. Obviously, you have to be able to pick the stock. Picking the stock, it's actually not that difficult. But the key, you have to hit the right option. So when you start looking at this, okay, when you start looking at this, you're like, whoa, what is the right option? Believing the home builders ETF would go down, we initiated buying the 48 put option rather than shorting the stock. The risk is limited to the debit paid for the put and provides us a nearly dollar for dollar move if the ETF sells off. Basically, all we did, we created a short position using a put in place of short shares, and it's allowed in a retirement account. Okay? Yes? Good? Maybe? It's something that you should think about. And by the way, this is only the beginning. Okay? So we're just going to buy a deep in the money put. Why? Because we want to get short. Short what? The XHB. But I could short all kinds of things, which we're going to cover here momentarily. Why we use a put in place of short shares. Buying the put option is nearly equivalent to being short the stock, but it ties up minimum margin. Can be done in a retirement account. Limits risk to the upside. Okay? What? Limits risk. Upside exposure. What was my upside exposure? I just mentioned a moment ago. $3. That's it. Okay? You saw my fill a moment ago too. That is my fill. My fill is at 296 in this particular trade. Okay? And put buyers do not pay dividends. The put can be held for an indefinite period of time with the use of what's termed a roll. So we have every attribute of being short the shares without the risk. We're not paying dividends. We could do it in a retirement account. Okay? Huge in terms of like tying up minimal margin, and huge because it limits our exposure. And again, we can hold this trade indefinitely. This is what we term a roll. Now, if you want to see it in all of its glory, here's all the trades. What I mean, all the trades, okay? These are all the trades I've effectively made inside. Again, I wanted to show you my first example. I wanted to show you something that has been opened and closed, okay? And I want to show you some of the time horizon of this trade. First and foremost, here's the inception of the trade. It's on January 10th. We went out and bought this little monkey for $2.96, okay? It sold off. This is the first roll. What is a roll? A roll is where we receive a credit. But what we did is we took the trade and we moved it from the March option to the April option. Then we took it and moved it from the April option to the May option for another credit. Then we moved it from May option to a June option for another credit. Remember, I'm getting credits. I'm getting paid to do this. Then we had actually a terrible roll. It happens. We had a terrible roll. We gave back $4 of it. Ooh, boo. Then we had another positive roll. Then we exited the entire position for $3.75. Do some quick math over here. It's an absolute home run of a position. And I never, at any point in time, substantiated more than $2.96. In fact, after having the position on for less than 3 months, I rolled out of all my risk because the first roll, I collected almost all the premium that I initially paid out. Are we okay? Everybody good? This is a good stopping point right now. Breathe, okay? Breathe, because there's a lot going on. And again, every one of these is the live trade execution. So you guys know, this was taken from one of the portfolios that we maintain here at TheoTrade. We maintain portfolios. This is what we term a duration trade. What's a duration? It's the intent of holding the position for a bit more of an extensive period of time. Okay? All right. You know, it's awesome. I just asked, are we okay? We had 2 people come in there like, I'm okay. Okay? I'm okay. So, all right. By the way, somebody said, did I see it wrong? Would you really buy a $3 in the money put for $3? Yeah, no, that's a $3 put. I paid $2.96 for it. That's the actual fill price. So again, I took a screenshot at a different time of the actual fill price. The actual fill price, these are the fills. This is actually from an account statement. If you guys know Thinkorswim, the platform, these are the actual fills. This is what we call our trade history on here. And this is every trade that I made in the XHB, right, from January all the way into August. And listen, I closed the position. You can see it's a sell to close. I finally closed out of it. Why? I mean, the thing got beaten down badly already by that time. In fact, you know, we can go back and we can explore it, but you know, for argument's sake, let's continue. Let's continue on, because I know what you want, a more recent position. Here's one that I just put on recently. How recently? Well, here's a position that I put together, right? Here's the exact fill and time. So this is a position in CSX. I like CSX. By the way, I just put the really, really short-term chart up on this. I know it says 3-year, but this is actually going back right there. The initiation of this position on this particular day, it's November 8th, 2018. What was it? It's a couple of weeks ago, right? So we're what? We're 2 months removed. This is a fairly new position. I went out and I purchased at this point in time, and you can see the exact date and time over here, 9:50 in the morning. In CSX, I purchased the 80 put for $8.20. All right, so this one's a little bit more expensive. Why is it a little bit more expensive? I'll tell you why it's more expensive. We're in a volatile marketplace, and the stock was trading at what? $72. Okay, so at the time that I initiated this position, come on, this was a $72 stock. What did I see in it? Ooh, this is a good one. Okay, this is actually a position where, look where we are today. We traded 72. We're now down at 63. So effectively, okay, if I didn't do anything, now I did do a couple of rolls in here, but if I didn't do anything, you can see that we're ahead of the game by about $9, okay, because we've sold off by about $9. Now, on top of that, okay, I can't believe somebody actually said seems a lot like a lot of work for less than $10. When was the last time you took $10, okay, out of a position without having, okay, anywhere near that risk? Because I have to be very forthright. When was the last time somebody took $10 out of a position without substantiating $10 of risk, okay, on a trade? And now allow us to ice the cake and sell some options premium against our short position. Think about this. Selling premium against your shorts. Now, I am now long, okay, the CSX 77 half puts. I rolled them, and I rolled them into February, okay? This is my current position. So here, I'm actually in, and you can see Again, if you've never looked at this before, it's just an option chain. These are the 77 half puts. Okay, they're now trading for $14.35. Now, granted, I originally had how much into this trade? Okay, I had about $8 in change of risk. So think about this. I had $8. We'll just put it at $8 of risk. I now have a position worth 14. Okay, but that's not including the fact that I actually rolled a little bit, and I already took, okay, plus $2.50 of a credit off of it. I'll leave that alone. The cool part of this trade is not just about getting short and sitting there, okay? It's about selling short-dated options. I can sell, like I own this option right now. I can now sell a January 18th 61 put against the put that I'm long. Yeah, I can do that, and I'll collect an additional $1 in the next 10 days. So all I'm doing, okay, now is I am taking a position where, again, I want to be short. And I want to be short for the duration. Like, people are thinking too hard about this. Like, oh, well, I could get in here and out there and in here. Let me tell you something about volatility. You will time nothing, and you will like it. That's what volatility will do. When I say you will time nothing, oh yeah, you saw that one coming, didn't you? Nobody did. Okay. So why did I get short CSX? Well, this one was actually a complete and total layup. It was unscathed. It was unscathed in October. It's a sitting duck. You just got to know where the algorithms are going to point the gun next. All right. And the next bout of sell side activity got absolutely whacked. You won't be able to time anything in the midst of volatility. So what we do is we put on a position, we hold it, okay, and then we sell premium against it. We can actually sell premium. Again, we own the 77 puts for February, which entitles us to sell shorter dated options without substantiating more risk. Okay, look, I could just sell this option. What am I going to collect? $1 in the next 10 days. And then I could do it again. And then I could do it again. And I could do it every single week if I want to. I just showed you 10 days because, well, this screenshot was actually taken today. All right, it was during markets today. Stock was actually up by 1%. It's not going to really influence me. Okay, I collect $1, every 10 days. That's a whole lot of premium that I can sell against. Again, that's a whole lot of premium I can sell against positions that I want to be in anyway, right? Skew, love it or leave it. There are distinct advantages of being short. Distinct advantages. Okay, the options market favors the sale of put options in what is termed skew. In effect, you collect more options premium for selling puts. If you guys are unaware of this, okay, put options typically trade for much more. Out of the money put options trade for much more than out of the money call options because there's more demand for puts. All right. Here's a kind of a screenshot inside of the S&Ps. Again, this is the spiders. And I just wanted to show you. It's a screenshot from a while back. The only reason I wanted to show you this is, look, the put is trading for almost $1. The call is trading for what? 29 cents. What would you rather sell? They're equidistant out of the money. What would you rather sell? Would you rather sell a put for $1 or a call for 30 cents? I'd rather sell the put for the $1. Okay? So there's an advantage of actually being short and selling puts, especially during volatility, because everybody wants to buy puts in the midst of volatility. So bears can befriend skew. Selling premium against our puts. Selling short-dated options against our longer-dated options brings in a weekly income stream. It lowers our cost basis into the put we purchased. Remember, a moment ago, I just showed you a CSX position. Okay, I purchased that little monkey for like $8.20. And then I just sell options against it, sell options against it. I didn't show you that like early on because I didn't want to confuse the situation. Via bringing in weekly premium, okay, we can profit even if the stock stays flat or is range bound. Right now we're in volatility. It's a great time to do this because all the volatility, the volatility of options is up. So it makes a lot of sense to sell some premium. Okay, takes substantially less risk than shorting stock. Okay, selling put places the option skew in our favor. So a whole lot of good things that are going our direction in this particular case. Okay. And I can't stress this enough. Now, how to collect income being short. The idea of this is a really easy one. We want to achieve maximum reward for minimal upfront risk and be capable of selling options premium. It's got to scream, limit your exposure and maximize your premium selling potential in this marketplace. Okay? Here is my CSX position. This is the current risk graph of the CSX position. Okay? Now, right here is where we're really trading in CSX. Okay? I'm already up on that trade $1,000. Okay? And I'm going to be very forthright. Okay? That is only, and this is the shocking part, it's only one contract in there. Okay? I thought it fair to only put like in the portfolio. So we're actually displaying a portfolio, and in that portfolio, I only put one contract on because it's not fair, because not everybody necessarily can trade 10 contracts or 15 contracts. Okay? I trade heavily. But in the portfolio that I track for our clientele, I am capped in one lot. I don't, who cares? Somebody goes, I did 200 contracts. Good for you. Golf clap, golf clap. Okay? It doesn't matter. I've owned tens of thousands of shares of individual stocks. Doesn't matter. If you could do it with one contract, you could do it with 50 contracts. But you have to learn, okay, with one contract before you can scale up. Let me show you a couple more trades. By the way, there was a great question that came in and said, hey, I don't retire for 20 more years. Should I just keep adding money, buy this dip? Well, if you don't mind losing 40%, because that's the average bear market. I personally think it's insane. Why do people just sit there? They sit there during bear markets. They go, what? Because you've been convinced by the street that you could just sit there and take a hit? There's no reason. The Fed says, what? They're going to pull the punch bowl away. I think you should listen to them. Don't listen to me. Listen to the Fed. You don't listen to the Fed? Political turmoil. China slowing down. Germany, literally this morning, Germany had one of the worst, okay, industrial production reports they've had, right, since the financial crisis. Like, don't listen to me. Listen to everything that's going on around there. The rhetoric has completely changed. It's not good. And I wouldn't sit there. Who cares? You sit there for the next 20 years. You know what happens to people that sit there for 20 years and do nothing? Okay, right before they retire, if you head into a bear market, you're finished. I literally, you're finished. I worked in the brokerage industry for 15 years. I was there during 2000, 2001. You better believe I was there during the financial crisis. I was on the phone, okay, with creditors constantly calling us saying, like, are you guys going to be okay? Meaning that there was liquidation events going on in the financial crisis. You know what? There was huge number of people. Okay, at that point in time, they were ready to retire. Okay. What? They had to wait like another 10 years? You can't time it. You can't time when you want to retire versus what the market's going to be doing 20 years from now. But I can tell you something. We've had unprecedented quantitative easing, and now they're tightening it. And it is not going to fare well for your future if you're buying stocks. The best stock picker in the world didn't survive December without taking a hit. Would you buy GE, Ford? Maybe. Okay, maybe you got a little bit less scathed than the rest of the marketplace. Here's a couple live trade examples. Caterpillar. This is everything that I've done in Caterpillar. Okay, the reason I mention Caterpillar, and I want you to look very, very carefully in the inception of some of these trades. Okay, I've been in the Caterpillar trade for quite a period of time. These are all rolls. Okay, rolling. Look at some of the credits on some of these rolls. It's been huge. And all I'm showing you is that I sustained a Caterpillar position. Okay. And you can see from I had a 190 put, I rolled it to a 175 put, then I rolled it down to the 165 put, then I sold some option premium against it. Then I rolled to the 160 puts. Okay. I had a negative roll right there. Positive roll. Oop, not a good roll right there. Positive roll. Huge roll. Okay. Here, I actually added to the position because we rallied back up. Monstrous roll. Look how many credits are on here. All I'm doing is collecting premium against a short position. Now, that's a trade. Listen, I'm telling you right now, Caterpillar, the ship has sailed. You're not getting into the Caterpillar. You're not getting into that trade. Why? Stock's already been beaten down, beaten to death. You want a trade example? This is a new trade idea. It's in Lulu. Okay? It's Lululemon. The rally in Lulu has been absolutely fierce. We're not quite there yet. I'll let everybody know, okay, at TheoTrade when I actually initiate the Lulu trade. Because this is like, the full Monty over here. There's a 3-year chart. I do not have a position in here. I want to be very, very clear about that. Here's the ascension from recently, okay, the 60 level all the way up to 160, okay, drops to 110, flies, okay, at this point in time. Look at that move back up on a percentage basis. We missed it up here. Believe me, we're not going to miss it again, right? This could be a stellar short position. All right, and I can give all the reasoning at a later time. Now, you want another live trade example? Here's JP Morgan. This is another one that I've substantiated for a period of time. Now I'm in it, and I've been short, okay? Again, I've actually been short in this product for quite some time. So you can see the initiation of the trades. By the way, this one, okay, that's a little short duration trade, so I apologize, okay? Here's the initiation of the short position itself. Here's the first roll, the second roll, okay? All the different rolls. Every roll in here has been done for a net credit. By the way, the last roll was done December 19th. Why? I haven't closed this trade. I am still in the position in JP Morgan. Okay? Wildly profit position. Look at it since, again, the initiation of August 21st till basically right now. Next one, Macys, right? Macys. What have I done inside of Macys? Okay, this is actually some vertical spreads, but right on top of it, I've actually got a duration position inside of Macys. This one was initiated late. I just wanted to show you everything that I've done in Macys, but this one was actually added very late into the portfolio. And thus far, okay, off of our trade, we've had effectively one nice big roll out of it. Huge, okay? Absolutely huge in here. When I put it on what, November 5th, by the 15th, I was already rolling $3.65 out of it. Okay, here's another live example. It's in Lowe's. Lowe's was initiated on October 3rd. Okay, monstrous credit roll. Again, in a trade where you had $17 of risk. It's quite a bit of risk, okay, because the volatility already picked up in October. The first roll was a $19 credit. The second roll, okay, was a $9 credit. Think about that. I only had $17 of risk. Can I lose money in this trade right now? Nope. There's no way for me to lose money. Lowe's could rally, okay, to $1,000. It wouldn't make a difference. Why? I would basically be out of the trade at that point in time. But you can see I've actually rolled this thing out now into January, which we're in, and I'm looking to roll it again. Okay, and again, all the rolls, everything, you got to learn this stuff. Like again, these trades, and we go through like in a little bit of detail. In a matter of a couple of hours, it might seem like a lot of work. Look how much time's passed over here. This is duration stuff. You know, this is 5-6 months of trades. That's it. This is not a lot. You can set alerts for it. Okay. Do not fear collecting income being short. Maybe you don't know options. Okay. Or you have limited experience in placing option trades. Don't let this stuff intimidate you. You got to have these strategies for the foreseeable market future. You just, listen, if you think that you're just going to be able to buy stock and sit there, okay, that's not going to work well. You just had, again, all asset classes down. People that bought bonds lost money last year. You're supposed to be able to buy bonds, buy some stock, have a nice mix as you get into your 60s and 70s, okay? Think I don't know classical asset allocation? That's what they teach you, you know, at every brokerage firm. That crap doesn't work, especially when all asset classes are down. Okay? We can show you how and when to place these trades in a matter of a few hours. Okay? What we do, we create detailed recipes for every strategy. And that basically means we show you precisely which options to buy, okay, which options to sell, and specifically how to collect income being short. And it's baking a cake. You know, you wouldn't bake a cake without a recipe. Why trade without one? But this is what you need to know to have a degree of success collecting income being short. Okay. One of the first things, what makes a viable short candidate. Right? You saw some of the, you know, what I took out Macys, okay, which is a retailer. Come on, the retailers to me was the easiest one. The retailers were the easiest one because they weren't getting hit. Do you guys know, and if you listen to some of the videos that we did, like on YouTube and so forth, and you listen to some of the YouTube videos, Going back into the time frame of September, did you know that the retailers was the #1 performing sector even after technology started to fall? In 2018, in September, the retailers was the #1 performing sector. How could you miss that? I was short the RT. I was short in Macys. I even went after Nordstrom's for a period of time. It goes on and on and on. All right. That one was one of the easiest ones. And then again, like Lowe's and Home Depot, those things held up relatively well. FedEx, we went after FedEx in a big way. Okay. FedEx wasn't falling when the rest of the market was absolutely tanking until FedEx absolutely crumbled. Right. We'll tell you exactly what makes a viable short candidate. You got to be careful with that stuff. What volatility should I seek out? Got to know the volatility to make it effective. What expirations do you select? Not only do you need the expiration of the option you bought, you need the expiration of the option you sold. Okay? What should be the delta of the option I buy? The delta. What is delta? We'll explain it. What options do I sell against my position? What should the delta be? How far out in time? Okay? How do I roll my options? Want to know how to roll them? Okay? What's the amount of right or risk? You got to have risk. If you don't figure out the right amount of risk, okay, this is a moot point. You saw some trades a moment ago. I had $3 of risk. You saw another trade in JP Morgan. I had over $25 of risk at the onset of the trade. It's a lot because if you do one contract, it's $2,500. For some people, that's a lot. For others, you're like, I could do 20 contracts. But you got to figure out what the right around, that needs to be dialed in. If you don't know your risk, okay, again, it's a moot point. What we do here at TheoTrade, we build recipes. That's what we do. It's criteria. It's what we do. Criteria is recipe building. Okay? Trading, it's all about answering what ifs. We'll give you a good stock ETF candidate for a short position. We'll give you the correct options expiration cycle to buy, the correct option expiration cycle to sell. We'll give you how much capital to commit, what strike price options, right? Again, what strike price options do you buy? Which ones do you sell? We have the answers to all of them because we're going to build you a recipe with definitive criteria and checklists. Okay? Most of the stuff that I'm talking about and all of these checklists, a lot of this comes from researching. For 15 years, I sat behind a screen and had access to literally, for 5 years, literally had access to over 7 million brokerage accounts. In studying them, we actually came up with unique variables that you're going to encounter, like how, when, why, at what price. People, that's just the beginning of the variables that you're going to face while collecting income being short. The secret, is kind of in the sauce. Now, anybody, you can Google right now. You can Google, how do I get short? Of course, you're going to get 8,000 different sites. Okay. Not one of them, though, is going to tell you the steps to actually go out and say, step 1, this is how I find a candidate. Step 2, okay, which options might I select? Okay. Step 3, what might I sell against this? By the way, it's about 11 steps getting into this. Then we have a multitude of steps for rolling. All of it's covered. Okay. Every nuance that you can think of. What if the stock goes up? What if the stock goes down? What if the stock stays flat? What if we get in a wildly volatile marketplace? When should I close out? We spent years fine-tuning this stuff. Okay. Follow the steps to build a trade. Here's how you can collect income being short. We have a class specifically on this. It's called How to Collect Income Being Short. The curriculum. It's how to short the market with little capital, which is obviously by using puts. Using options to short so your risk is minuscule compared to shorting stock. We're actually going to talk about creating short positions in retirement accounts. All this stuff works in retirement accounts. In fact, on a day-to-day basis now, I trade in my retirement account. We'll actually show you how to identify the most promising short candidates. That's one of the most critical things. You pick the wrong short candidate, somebody will be like, did you go out and short Netflix? Are you crazy? Wouldn't have fit. It wouldn't have fit the profile of what you can short. It just would not have fit. Doesn't matter if it fell from $424 all the way to 100, or 200 and change. It doesn't matter. It wouldn't have fit the profile. Okay? We'll show you proven strategies used by seasoned traders to short positions while waiting for volatility to strike. Again, we'll look at options skew in here. Then we give you the step-by-step criteria, what the advantages and disadvantages, okay, of selling short-dated or weekly options against it for, again, weekly income. We'll look at the benefits and risk of using inverse ETFs. Okay, people always ask me about inverse ETFs. It's actually covered in the class versus using synthetic short positions in an IRA. Okay, how to determine position size is a critical aspect of this course. Okay, and again, you're going to learn to roll those short positions without having to sit in front of the computer. If you got a day job, it's fine. This is a very hands-off strategy. And it's really important, again, that you guys understand that this is not sitting in front of your computer all day long. Right? We have stuff like that, but this isn't it. How to collect income being short. I'm the trade instructor for this. It's a 3-hour course. It's available immediately. This one is in the can. You can stream it like literally tonight. The class slide deck that has all the entry and exit criteria. It's the checklist. It's available immediately for download. The class also qualifies you for a reduced commission rate. And we have reduced commission rates at a number of major brokerage firms. Now, of course, I worked with Thinkorswim and TD Ameritrade, but we also have deals in place with E-Trade. Okay, we also have deals in place with Tastyworks. So we work with 3 major brokerage firms. And again, the class qualifies you for a reduced commission rate. You do not necessarily have to open up new accounts. If you have an account with TD Ameritrade, we can get you a discount. But you have to enroll for the class. The class is $297. We do, offer a little bit of a deal this evening. What do we have? Well, I'll tell you exactly what we have. Everybody that's ever gone to a class, by the way, how many of you guys have ever gone to any class or paid for any type of education in the financial industry? Okay, I think it's a fair question, right? How many people have ever paid for anything financial related? Okay, some people have paid it's sickening. And I'll tell you right now, when I ran education for TD Ameritrade, in the education group, there was an entire course structure. It was over 20 months, and they charged $24,000 for it. What we do here absolutely blows it away. And my general feeling about education, everybody that tunes in over here, it's like, you've been there, you've done that. You've tuned into this, you've been through the gauntlet of paid classes, you've been through indicators, what I call secret squirrel black boxes, all this crap. Only to find, just buy this one last thing, it's going to make all the difference. But wait, there's more. Please. We can't stand it. We've had enough of educational garbage sales pitches, and we're trying to put an end to it. How do we put an end to it? Disrupt financial education. You remember, every one of our instructors, they are traders. They have 15 years of experience. They're not professional salespeople. No one on the crew here, has sold anything, prior to working at TheoTrade. Nothing. They were traders. We found people literally that either came off the trading floor, worked with us, at TD Ameritrade in some capacity to either be building technology or one of the traders there. Educating you is our only goal, and we demonstrate that. Hopefully this changes the way you view financial education. And what we do is called TotalTheo Unlimited Streaming Monthly Membership. It's a membership. You're like, oh no. Allow me to explain. Unlimited, it's only $99 a month. What does $99 a month get you? Everything. What's everything? Oh, it's everything. It's everything that we do, everything that we offer, everything that we are, and everything that we're going to do. How to collect income being short. That's the workshop I just spoke about moments ago. It's included in TotalTheo. It's unlimited streaming. It's the Netflix of this business. You have access to over 79 trading classes in total. What do you have to do for 79 trading classes? You have to pay $99 a month. You don't have to pay $297. By the way, if you want to pay $297, be my guest. You can pay $297. But if you pay $99 a month, and there's no do I have to sign up for a year? Does it say that? No, it's month to month. You want to sign up for $99 a month? Fine. There's new monthly classes. We don't, we average right now 2 classes a month. We don't stop. We average 2 classes, new classes a month. Everything's available immediately on demand. We also have a live trading chat room. You realize that some people pay $200 a month, just to be in some chat room. Well, that's included. So we have 79 classes. We have new monthly classes. That's 79 classes in the can, meaning it's ready to stream. We broadcast 6 hours per day. We have 7 instructors. I told you we had 7 instructors. Well, we broadcast 6 hours per day. Indicators. We have 59 proprietary indicators and scans. We email out trade ideas. We have daily coaching sessions with timely topics, meaning that the education goes on every single day. Instructors are also, duly qualified. We answer questions via email. You can email us, support@theotrade.com. We'll answer. Go to theotrade.com/all. Now, little bit about what our members are saying. Okay, I love this one over here. You guys are rocking it. Very impressed. It's really refreshing to have you guys putting this together, sharing knowledge and not, upselling everything and turning and burning your customer base. You've got a customer for life, okay, in me because of this approach. And I'm sure I'm not the only one. Here's another one. This is actually I love the picture on here. This is actually directly from Facebook. I'm very impressed with TheoTrade. I've studied under other stock coaches, various, strategy, intellects, and different trading plans. I've not come across anything as good as what I'm seeing here. The people at TheoTrade are very helpful and extremely knowledgeable. I'm looking forward, okay, to this association for years to come. What are we doing here? Again, as I said, if you want, you can actually purchase the class, How to Collect Income Being Short. The class, come on, it's easily worth $297. Okay, you probably got more than that. And a lot of people, they come to this free session this evening, they come to this and they say, I got more tonight than I've paid for at previous classes. We can charge you a one-time fee. You can sign up the one-time fee and just receive the class. Or for $99 a month, you can have the class, you can have the access to the other 79 classes, access to new monthly classes, live trading chat room, which is 6 hours a day. Everything's archived 24/7. By the way, we have a mobile application. Did I mention that? We have a mobile application. You can even be at 30,000 feet and not have streaming access. You can actually download the classes on your mobile app, okay? Just like Netflix, and now watch it over the mobile application. It's all included, okay? We have email out the trade ideas, trading indicators and scans, daily coaching sessions. It's all included. It's as if we're giving you $200. Why do I say that? Because, okay, we're pretty sure that after you check out what we do for $99 a month, and the reason we do this, because we're sure that you're actually going to continue your membership. We can go out there, we could charge $1,000 a class like everybody else. What's the point? Okay? We have now 3,000 members and adding, okay, members every single day here to TheoTrade. Why? Because nobody can produce the content and the education like we can. Here again is the site, theotrade.com/all. Let me actually bring it up, answer a couple of questions here, and show you a little bit about the site. Again, as I said, theotrade.com/all. The number one question, by the way, that comes up is like, is this a membership? It is. Okay. What happens if you cancel it after a month? It's okay. You're at $99 a month. By the way, if you sign up for 1 month, it still gives you a discount, okay, to, for instance, TD Ameritrade, like the brokerage discount. All right. So, yeah, I mean, we're fine with that. Listen, after a month, if you don't love us, we could part ways. We'll still be friends. We get it. Okay. Things come up. But I bet you anything, by the way, you could probably watch a lot of classes inside of a month, but people don't like to hang up on us. They love what we're doing. In fact, I'll tell you, true story here. People will come to us, pay $99 a month and be like, yeah, I watched a ton of classes in the first month. Then they turn it off. And guess what? They all come back. All of them. Okay. It is amazing. Everybody comes back. Why? Because that's how much we do. And we're always pushing the edge of the envelope. I bet there's a lot of people on tonight. They're like, yeah, this is awesome. Here's a little bit about the site. First of all, you might be brand new. You know nothing about trading. Okay. Let's just start here. Okay. Start here. What is that? Options 101, options 201. Okay. Options 301. How to execute trades, preparing for your trading day, crash course on option geeks, whatever. Okay. Getting your risk under wraps and risk under control. That's just the start here menu. If you want to see what the option strategies, look, okay, this is our class archive. Remember I said there's 79 classes? Guess what? You can go to option strategies, option newbies, technical analysis. You think we don't have market technicians? We have Slim Miller. Okay. We have Jeff Bierman. Okay. We have Corey Rosenblum. These are all like the absolute pinnacle of market technical analysis are all on our crew here. I might not look at charts that much, but guess what? Okay. We even have mindset trading classes. For those of you, if you want to get into the psychology of trading, I've seen classes out there for $2,000. 5 essential building blocks to successful trading. Okay. It just goes on and on in terms of the number of classes that we have. And a lot of people think this is very overwhelming. Well, for $99 a month, we'd rather overwhelm you. It's again, you log on to Netflix for the first time, like you're brand new to it. You're like, oh, what have I been missing all these years? This is what you've been missing all these years. Okay. This is actually the member home. What's the home? It's all the stuff you have access to, but it's also a fully searchable archive, right? If you want to learn something about, I don't know, okay? Let's turn into, what do you want to learn? Options volume, unusual volume, volatility futures. I mean, I can go on and on and on and on. I don't know. Let's just type in spreads, okay? If you want to learn about spreads. It has a full searchable index in here so that at any given time, here, coaching sessions, ratio spreads, okay? You want to learn about ratio spreads, in-out spreads, okay? I mean, you want to learn about risk twist spreads, it's all part of it. So again, it's a fully searchable index. Now, last thing, there's portfolios, as I mentioned. Duration portfolio, fruit fly, growth small account, and a sell premium portfolio. So you've got a selection of different portfolios, and these are emailed out to you, but you can also access the portfolio. You can click right on it, okay? And all we do, made it as simple as possible. It's just a spreadsheet. That's it. It's just a spreadsheet of the trades that we're doing, talks a little bit about the portfolio, and updates you, okay, on each individual trade. We try to make it as clean as possible for you. Now, I'm going to answer a couple of questions. I'm going to throw up the website again. Also, listen, contact us, support@theotrade.com. There's our 1-800 number, okay? Again, we're kind of no holds barred here at TheoTrade. We answer emails, we answer questions. We don't shy away from it. Somebody asked, is TheoTrade mostly about options? What about intraday gap trading? Absolutely no, we're not. We are not pigeonholed to options, stocks, options, futures. In fact, when it comes to gap trading, we're second to none. Corey Rosenblum and Jeff Bierman, they're your gap traders. All right, we have a futures trader, okay, multiple futures traders on the crew. We have pure stock trader, which is Jeff Bierman. All right, gap trading, you name it, we've got answers for it. Risk management, that's actually my field. Anthony was asking about that. So risk management, oh yeah, you better believe it. There's so many classes on risk management, it's going to make you sick. The number one question we always get, it's a membership, it's $99 a month. Can I cancel anytime? Absolutely. Another question that always comes up, I can't get approved for options because I'm new. We can help you get approved for options. We'll walk you through that. Okay. Next question. Can I do everything that you talk about in an IRA? Absolutely. Again, I trade now in an IRA. I trade in an IRA, right? So why do I do that? Because I'm, at the point in my life, I'm in my early 40s, but I'm at the point in my life, I don't need income anymore. Okay. I passed that. I signed a multi-million-dollar deal when I was 29 years old. Okay. And helped take a company public. Okay. People always ask, why do you do this? What am I going to do? I'm 42 years old and have 3 kids. By the way, I don't care if you have $5 million in the bank. you got to do something. And for me, this is what I do. And I like it. Okay. Day trading margin rule, we can help you deal with that. Okay. So if you got, day trading margin rule, we can talk a little bit about that. Somebody always says, I can't join every single day. I get it. Listen, everything's archived. Listen to what you want when you want. Nobody says you have to watch Netflix. You don't have to watch Netflix, but you kind of do. You tune in from time to time. And a lot of people say, I'm so brand new to options. Okay. Again, there's so many newbie courses that we have. We realize that, right? If you work full time, don't worry. We email out trades, and the trades that we email out, they're soft, they're gentle. Okay. Do I have a course specifically on unbalanced butterfly spreads? Yes, I do. Okay. That one's me. So if you're interested in a course in unbalanced, I love this. By the way, this is the trading room. This is the streaming room. Okay. So people are still in there trading right now. Okay. Listen, this was posted just a little while ago, so you can actually see, all right, in any given day, we have about 2,000 people that log in, okay, throughout the course of a day. And here there's 3,000 people right now on the streaming service. Somebody asked about the unbalanced butterflies over there. Just go into the class archives. In the class archives, okay, it's under option strategies. Okay. Why is it under option strategies? Because it's an option strategy. Cruise down over here, or you could search through there. Okay. There's butterflies guide. All right. We've actually got something in here. It's butterflies guide to the ratio of butterflies. That's basically your unbalanced butterfly, but there's more because we actually have fruit fly. Fruit fly is definitively an unbalanced butterfly. So it's actually a great question. We have got a class for it. All right. And again, we're in the chat room every single day. I kick off. People are like, I don't disappear after this. I do a minimum of an hour a day. Most days I like to try to do like 90 minutes in the room. So again, we're here. We're here to answer questions. You can email us. Again, given the volatility right now, you're really going to enjoy this subscription. It's going to help you a tremendous amount. TheoTrade.com/all. I want to thank everybody for joining this evening. Have a wonderful evening. Bye-bye.